Shake my hand, ladies and gentlemen, and welcome to another video. Technically speaking, this is video number 5, Asset 5. Today we are looking at EURZAR, right? So EURZAR, the last video was USD ZAR, the video before that was USD JPY, then we had Pound USD, and finally the very first video that kicked us off, which was Euro USD. I encourage you, please go through all these assets. There's a story that they're starting to tell about the institutional flows, about where trades are, about long-term positions, and I'm starting to formulate. It's still a very small sample size. I've got 109 assets I want to go through. It's almost every single currency that I love to trade. About 10 main stocks like Tesla, Amazon, Apple, Netflix, Goldman Sachs, Microsoft, Pfizer, Zoom, gold. Then I want to look at gold, crude oil, silver, cocoa, coconut, wheat, natural gas, heating oil, platinum, coal, soya, gasoline, coffee, sugar, Brent oil, palladium, copper. Then I want to look at a couple of hand-selected cryptocurrencies, the Bitcoin, the Ethereums, the Ripple, the Stellar, the Dashes, there's a whole range of things. And then eventually also end with a couple of indices, like the popular ones, all the ones that we've traded before together. S&P, the NASDAQ, the US 30, the DAX, the Russell 2000, etc. So there's 109 assets that I overlooked that I really, really want to go through one by one with you in these shorter, tailored videos. My dream was to make these videos 10 minutes, but I can't get below 20 minutes for now. But it's because I still have to keep emphasizing that, I'm back, and I thoroughly thank you for reaching out. I appreciate all of you during my period of silence. I couldn't respond to one of you, because if I did, I have to respond to everyone. But if you got the long email, if you're part of my mail list and you're a registered student, I'm back, and I think I've given clear marching orders for the year. But I hope during my time away, you were also not paralyzed. I hope and maybe if you're absolutely new, sure, but if you've been with me for a little while, then I hope for at least 6 months and above, I hope you are not completely paralyzed. I hope I left you with enough equipment to get on with the work, right? So today we're looking at EURZAR. Without further ado, I really want to keep this video short, so that will suffice as an introduction. But do check out Euro USD, the very first video I did, because in it there is a much more long intended explanation, right? So I mean if this is your first time watching me do this stuff, then please do subscribe. Okay, that's problem number 1. Subscribe, please hit the notification button, because you're in for a ride. But if you've been following me on the series, you know that I'm starting on in the positional charts. I want to see where the banks are, where they've been, where they're thinking, and where on earth they're going. The TradeView version I'm using is the free version, right? This is not like the pro version. It's literally the free version, which means you don't have to pay for this information. It's just that retail traders don't use this data, don't know how to use it, and to be honest, don't even know what it's there for, right? You see retail traders all the time, H4, H1, 15 minutes, done, and that's a big problem, because then you get caught with long-term waves, long-term trends, and you have no idea what's going on, right? So EURZAR to me is not going to be that shocking, especially after you've looked at USD ZAR, right? We call these right in the markets, right? We expect something similar. There we go. COVID 2020 demand in check, right? If you scroll back here in 2018, price falls into a nice demand. There, 2018, price goes up, etc., etc. There's also another classic buy profile asset. It's simple. Supply and demand, man, is one of the most prettiest, most simplest things to understand once you have all those rules. Not only that, but it just makes life so much better. Clean, double bullish engulfing order block catches price there, right? This is all the way in 1997. And now I was actually still watching American Crime Story, by the way, so I'm catching up with the Bill Clinton saga. And I'm just watching. I really love how, watching how each independent house, so Democrats, Republicans, and their relationship with the dollar and world economics goes. And you can see this has been a trend from the beginning of time. Literally, markets just formulating around one clear solution. If we're going up, we're going up. We're going to create demands. We're going to protect the demands. If we're going down, we're going down. We're going to create supplies. We're going to, protect the supplies. If we're going up, we're going to remove the supplies, break market structure, and continue the trend. There we go. Breaking market structure to the upside. There we go again. And this is not something you only do on one time frame. Right? Price is fractal. Fractality speaks about how price is constant, identical. It's the DNA of its structure across all timelines. So we see this at play. Right? You can chop it up however you want to chop it up, but at the end result is institutions have one long-term plan for these assets, and they're going in that particular way. The most interesting area of value that I really want to focus on is the one that's left in front of you, and this is the current long-term position of demand in control, right? And that's what it is, because we have here the 2020 COVID price really comes in, really looks for its lows, and since then this asset is back on track, right? If you want patterns, remember you used to do patterns in school. It'd be like 1 + 1 = 2, 3 + 1 = whatever, and you have to kind of like guess the sequence. There's a sequence at play here. There's a sequence. It's 365 candle, 365 candle, 2 big candles, complicated, 3 big candles, 2 complicated, 3 big candles. If you see the sequence, you'll know what you for a slightly up push and then a couple of reds. Remember, every single candlestick here represents 1 year. This is a 12-month chart, right? So now we're going to drop down to the presidential chart, the 3 months candle. We call it presidential because banks think in 3 months, take profit in 1 year, in a 10-year span. We're going to mark up any available visible supplies, because if there's a supply at play, we must see it, we must acknowledge it, and then we must plan for its timely demise. Why? This is a buy profile asset. Right? Just like history repeats itself, history will repeat itself. Every single supply will be taken out, and there will be a demand for that, right? So let's break down this 3-month zone. I can make it big, which would make it ugly like that, and then, drop it down and drop the 12-month demand. Now I'm going to add more, just so our chart is slightly more palatable and that we can actually see what we're doing. Right, there we go. This is now the 2020 COVID demand, right, which literally took a lot of its power from the 2018 demand. If you followed my video from EURZAR, you'll have seen me mentioning a EURZAR 2018 demand that's also in control, right? So you can see that markets generally do like to move in uniform. Right now, this is quite interesting because demand gives birth to supply. The supply creates a major turning point. Go to my module 1 for that. Links down below. No time to explain the significance of that right now, right? Major turning point takes out previous major turning point. Previous turning point went to a demand. Previous turning point, which was over here, previous turning point was then later on taken out, where price had to first create a demand, did go to a demand, went to a demand. I mean, currency wars and master currencies are harder to trade short term, but long term they're easy to read. Give me $1 million and I'm going to put it in an asset. You're going to want to look for an asset that moves like this. You're going to want to look for an asset that no matter what happens in the long run, you're always betting that the euro will be stronger than the ZAR. And if that's the case, you tell your client, give me 10 years and I'll triple, quadruple your money, because I'm going to put it in here and just wait. And this is what we see happening. Price just moves up and up and up. Yes, there are 3, 4, 5, 4 quarters of red, but they just come to a perfect buying moment. So you take profit at the supply as an investor. You pay your client a little bit of percentage. You keep the rest for the house. You wait for a demand. You pump it low and you allow price to move up. Same thing. Why is this difficult for most traders? Because it takes time, because you can't get the Lamborghini overnight trading like this, but you definitely can trade very safely like this, right? So we have to deal with lifestyle and actual real market knowledge, which is not what we're doing today, right? So then price created a bearish engulfing demand when things got hot. Things got hot because of war, because of interest rates, because of all sorts of things last year, January 2022, but price fell back into a demand. Dumb sellers were here selling. This is a classical green light for supply and demand traders. When I teach about my art enhancers in module 2, don't forget, guys, this stuff is there. In 90 days I was away, you could have gone through all my material again. Yeah, man, never mind. Look, but the point here is markets, this is a green signal for buyers. You buy, we look crazy when we buy, and we always look crazy when we sell, because when we buy, it feels like we're going against the trend, but instead we're waiting for dumb traders to come into our areas of existence, right? Price then shoots up into demand. Now we're in a supply. So now we need to start now peeling off these layers and seeing for ourselves, is it really a good idea to sell Euro USD ZAR because we're in a governing supply? So I'm going to tighten the 3 months chart. I'm going to make it look something like this, taking control of this zone area of competition, but also because this is the real main supply here that's in charge, right? That's the I'm trying to find the highest point as taught in my module 1, and they look quite equal there, right? They look very equal there. Right, this is India. This is interesting, right? So now prices here. There we go. This would be a supply within a supply, right? One would argue there's a supply within a supply, and a supply within a supply is in contact with the demand. So this is very ballsy of buyers, right? Creating a demand here. If you know me very well. I'm on the governing time frame, by the way. I don't like buying so close to supply. I'm a safer guy. I want you to take this whole area out and come back for me, right? Take it out and come back for me. For me personally, I am genuinely much more appreciative of not always being the first. I like moving when everything is clear, all right? I'm moving when everything's clear. So for me, ideally, take right? Number one, it could be a quick comeback all the way down there like this, but either way, come back for me, right? But we'll see. Let's keep scaling down. But we can see that, you know, for all intents and purposes, EURZAR is a little bit parabolic. Yeah, sure. There's been minor 365 candles as punctuations along, you know, the stiffening climb of this asset, right? You know, it shot up. You know, as soon as it trapped enough retail traders in the sell pot here, it just exploded to the upside, right? So there are a couple of other demands that are, you know, quite fresh and looking for love, right? They're looking for love. So like I say, this again is not the most exciting demand to take, but the question now is, will price here? We can't even draw a bullish Fibonacci. Why? Because we have rules for Fibonacci. Fibonacci needs two things for it to happen: swing high, swing low. We don't have a swing low yet. For me, I can't call that a swing low. So I don't know where the swing low will be. What we can do is speculate. Say worst case scenario, the swing low is at the supply. What would that look like? This is not trading advice, because now I'm just guessing. I'm playing a guessing game. Until I get a swing low, I don't know. But if I'm marking it at the very end of a supply or at the break of a supply, and markets were to want to come back, I now know that my golden ratio is at the slower demand that I said I like. It's just that I've done this so many times now. I can literally see areas of values that I absolutely like, right? So if I draw it properly, there's my swing low right here at the bottom. There's my swing high at the top. My golden ratio area, it seems to me that price is waiting for me. Will price make it all the way down here? I don't know. You know, if you look at 2022 last year, which would be January of 2022, right? Somewhere here. This is, wait, January there, right? So price in general is within the 17, 1 is to 17 regions, right? It dropped a little bit by April, which is where we are right now, to 15. So wait a minute. Banks thinking 3 months. Take profit in a 1-year plan. It's the month is April 2023. In April, man, this is always in front of us, but I don't know if people actually care to listen. In April 2022, price started on its journey leaving a demand. In April 2023, a year later, price is in a supply. What's the saying? Banks think in 3 months. Take profit. What would profit taking look like for longs? If you bought in April 2022 and your client walks in and says, I'm getting a divorce, my wife left me, I need to split my assets, I've been subpoenaed by the courts, I want the $2 million we put in this thing. Take profit time looks like this. You're going to remove this money from the markets. You're going to close your trades. When you start to close longs, things fall, but you don't close longs randomly. So markets move in a sequence. How how come after a year of pumping, prices arrived in an area of supply and it's April? So I would not be surprised if we get a significant drop. I would not be surprised for the next 2 to 3 months we start to see a significant drop to the downside, and then very later on in the year we continue up on our way. This would be a much more ideal trading situation for me. I've got supply and control, so I'm holding on the buys, right? So for now, this is my monthly governor immediate area of value for buying. In contact, currently in control is immediate supply, and the long trend is going up. That's what EURZAR does. It goes up whether you like it or not, right? So let's go down to the Mayoral time frame. Mayoral time frame shows us complicated 365 candles creating a nice clean order block, right? I'm going to delete this zone. This zone here is I think the monthly chart or the 3 months chart supply. All right, and then now we're left with the governing supply. I'm going to tighten the governing supply so we can get the ultimate true sell point and check it. Yeah, it's got a clean imbalance. That's perfectly fine. And then now I'm going to remind all of us that this is where we want our governor, buying governor and control to buy. So we want price to come back down. Or rather, we are starting to look for retracements. We need to see take profits happen. And we've got a supply willing to do us that favor, right? So I'm going to increase this governing zone to look like this on the weekly time frame because they're two strong order blocks. And this could really work out as a buy zone, right? And you don't want to miss out. Here, we have not had, on our Kinehash, we don't have a confirmed order block because this is not a bullish engulfing on a Kinehashi. And so we need a longer imbalance according to 365 rules anyways, right? If I go to normal candlesticks, yeah, sure. There is a bullish engulfing candle, so you can draw it. There you go, right there. Weekly demand zone, right just above a supply, a weekly supply inside a governing supply, as you can see for yourselves there. Whether a price is now feeling the sell pressure and dropping due to area of competition, you would have to find out for yourself. And the best way to do is to go at Kinehashi. You'll see the area of competition when you draw a Kinehashi candlesticks is slightly long, which would argue that price has already made contact with supply. So if I draw the wick of that body there, this wick there, this green wick there, right, there we go. So if I'm just drawing the wick there, you can see my area of competition has made contact. So this whole area is now supply, right? This whole area, sell, right? So banks are starting to slowly offload. You go follow up your CLT, go start to study in the last month how the orders have been. Have they reduced their shorts? Have they the stuff I taught? Like go see now that kind of stuff to make a good decision. And if you start to pick up a pattern of less longs, more shorts, just know they're going to start to offload their position. If you don't pick up a pattern of less shorts, more longs, and they've got more longs and less shorts, then know that they might just use this area here to take out the supply. That's all it is, right? But for now, this is what the weekly looks like, right? And then we finally go to our main time frame, the daily time frame, where we really want to get down with it. You can see that the daily, as soon as it made contact with the supply zone, which you've drawn correctly with the area of competition. Remember, I used the Kinehashi wick. That's how I got this white line. Or you see on daily bowed down. Daily was like, yeah, man, I'm in alignment. There's way too sell pressure here in this area of competition, which is where institutions sell first before retail traders even know what's going on. So we call that the area of competition, right? And price has gone. Now, there's a demand close by here, but remember, this whole zone is that weekly is that first weekly demand, the one that we said is too close. Don't get confused, guys. This is why at 365 we like to mark our areas of value. So here I would have said something like this. I would have said weekly demand zone 1, and 1 doesn't mean it's a priority. One means it comes first in terms of who is in control. So it's the closest demand to be made contact of, right? It's the closest to the supply, right? The safest one is obviously this one here, which is weekly demand zone 2. Because when you start to look for your sequence alignment in multiple time frame analysis in combination, you will get confused if it's your first time doing this stuff. You'll start to find imbalances everywhere, right? But all this stuff is my module 2 and module 1. I can't multiple time analysis, sorry, is in module 1, right? So you see now much more clear. So we know that this is the demand zone that we're not that excited about, but could work. could work because it's a long-term buy, but now we've got a daily supply at the competition of a weekly supply, and we still have all these weekly sell orders in here that we don't know how strong they are. So now that I've got my weekly demand zone 1, which is my next port of call, instead of focusing on this demand here, which, you know, I'm pretty sure a retest into the daily supply, a retest into the sell, I'm going to focus my efforts here. So if you're a risk taker, and it's not just a risk taking trade, so it's a potentially good valid trade. It won't last forever. So you're looking for set and forget daily time frames. What does this mean? You take the daily demand and you get out on the daily supply. Sequence alignment. Some of you guys, I see you use daily supplies or daily demand zones. You think you're going to hold for weeks, ignoring what's in front of you. There's still an immediate weekly supply in front. So if you're going to take the risk to take this trade, not giving you financial advice, I'm here to fill out the markets. If you're going to take the financial risk to take this trade, you need to know where you're going to get out. And I always tell people, calculate your risks, whether it's 3% or 5% or 1%, depending on the size of your account. And even that, never give one lot size in. Break down your final risk. If it's 5%, and let's say you can only go up to 0.10. If you say or the biggest lot size you can use to only risk 5% of your account is 0.10, whatever your account size is, split that up. Split that up, have 3 positions in there, a 0.2, which should cover the cost of doing business. So that one, you want to take profit halfway. Your 0.2 trade goes off halfway. It should cover as close as possible the cost of your stop loss value for 0.10. And then you're going to have 2 other lot sizes, 0.4 and 0.4. Remember I said 3 positions. I'm just using a simple example at 1:3, or like in this particular case, there is no 1:3. You have to stop at the acknowledged daily supply. This is the most you can get from this trade if you take the trade, if the trade even works. This is the most you can get. So one of those take profits of your 0.4 should be here. A 0.2 would have already covered your swap, your commission, and your stop loss value, so that your capital never takes a ding. So your first take profit is halfway. It covers the costs of doing business. Take profit 2 is the supply. Take profit 3 is a just in case. Take profit 3, you break even, no TP. You broken. That's your take profit target for the final third trade. Man, I hope that was clear. I hope that was clear. If it's not clear, talk to me in the comments. I can bring it up again. Right, but 365, all the best. This is currently what we have to deal with in the short term, but this will be better. Or this will be much better. If price was to make it all the way down here, something was to happen, I don't know what. But euro is going to be strong right now because euro is now, it's the euro year, right? It's catching up with what the dollar did last year with interest rates. The sentiment is slightly changed. I'm assuming from the few charts I've looked at, right? When I have sentiment time, I'll then get back to you. Thank you again for watching another video. I hope it wasn't as long. You know, it's slightly 22 minutes, but I want to get this down to 10. But I love talking. I love teaching. Please show me that you like this stuff. Don't forget to like, don't forget to comment, don't forget to share. Imagine if every single subscriber once a week just shared any video on their Facebook. I would absolutely appreciate that. Please do tag 365 Trading Academy. This year, all notifications, everything media is going to come directly to me, right? So our media person was never a media person. They were really just a trader in the ranks, learning and doing intern stuff. But we finally put them on the floor. You know, they're ready. So I want to be on top of just watching and responding to people on time and comments and all that stuff. So please do talk to me, tag us, and I'll get back to you. 365, shake my hand. Till next time, peace.